You look at JP Morgan with, I believe their balance sheet, I think is $7 trillion. That's bigger than the People's Bank of China. And you're talking that the size of these banks are behemoth. They have $51 trillion in derivatives, and Goldman Sachs has like 53 or 4 trillion. And I always say, just how big a trillion really is. People don't get it because it rhymes with million, but a trillion seconds ago was 31,688 years ago. One of those banks goes down, it brings the entire system down with it. And how do you backstop $50 trillion in exposure, with an FDIC that has, $25 billion in reserves? It's just a joke.
Popular precious metals analyst and president of Miles Franklin Precious Metals, Andy Schectman, believes a massive storm is brewing on the horizon for the United States economy. According to the renowned precious metals analyst and relentless gold and silver stacker, the world's largest economy is being seriously threatened by a barrage of internal and external factors that could not only threaten its standing on the global scene, but also severely affect American investors. Unfortunately, Schectman says though the signs are clear and growing every day, Americans seem to be suffering from normalcy bias, a cognitive bias that leads people to underestimate the likelihood of a disaster and its potential adverse effects. One of the internal threats currently facing the U.S. economy, according to the analyst, is the health of regional banks. After March's scare, everything seems to be returning to normal, but Schectman believes this is just the calm before the storm. Late last year, the U.S. Federal Reserve wrote a report that 722 banks were technically insolvent. But Schectman says that's just the official figure, as many sources familiar with the issue reported that the number of insolvent banks was over 2,000 as of December 2022. Yet neither the Federal Reserve nor the Treasury Department is showing any interest in swinging to the rescue of the banks. Schectman believes this proves his earlier assertion that there are intentional efforts to get rid of regional banks. The other event that presents a significant threat to the U.S. economy, according to Schectman, is the growing supporters of China and the rest of the BRICS de-dollarization agenda. Not only has Saudi Arabia, the major force that made petrodollar possible, practically joined the alliance, but many other U.S. allies are now jumping ship and openly denouncing the dollar. We will now bring you clips from one of Andy Schectman's recent interviews with Liberty and Finance. Please watch the video to the end, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
But that is that the more and more I look at what is happening, it is becoming painfully obvious to me that a good portion of this is intended. Forget about the fact that the two main advisors to the president, one wants to get rid of the dollar as the world reserve currency, the other wants to get rid of the banks, that only feed into this feeling. But as they continue to lift rates, and as they continue in the case of part of the debt ceiling agreement was to issue $1 trillion in short-term maturity loans to reliquify, I believe it's called the GSA account. It's their savings account, the Treasury's account. And that sucking sound you hear is Janet Yellen issuing treasuries that are going to continue to suck money out of the already very strained banking system. And remember, these banks have virtually nothing in the way of reserves. And that was a deal that was enacted during the pandemic, and all of the money that was deposited in these banks went into what was considered to be a safe conservative asset, a mortgage-backed security backed by Fannie or Freddie at 3% or a 10-year treasury at 2% that have now become toxic. And aside from all of the systemic risks and the fact that the Treasury Secretary has told the public that if these regional banks go upside down, more likely than not, they will not be bailed out. We will be unsecured general creditors of this regional banking dilemma. And so the fact that the banks are allowed to, the commercial banks are allowed to invest all of their money market funds in the overnight reverse repo market, paying over 5%. And these banks are evidently too big to fail, regardless of the fact that money is flying out of those banks too. The big money is yanking their money out of those banks and going directly to the Treasury to the Fed and to the Treasury and buying the Treasury short-term Treasuries to remove all of the systemic risk with all of the banks. You look at the top three banks, JP Morgan, Citi, and Goldman, they have between them over $150 trillion in derivatives. And I don't care what the intentions are of the Federal Reserve. We've talked about at length how FDIC not only just was lent $74 billion from the Fed, but $150 trillion, the Fed cannot backstop that if these banks, if one of them goes down, the systemic nature of it will pull them all down. But what's happening is that the people are leaving the regional banks to go into the perceived safety of the too big to fail banks and the money market with daily liquidity paying 5%. And Janet Yellen is now issuing all of these bonds, this massive amount of bonds that are to be gobbled up by the public. And anyone who would stay in a regional bank really is crazy if they have enough money in there, and will continue to put more and more and more and more strain on these regional banks who have already put in over $94 billion in this new program that the Fed offers, this distress problem for the banks, where they can get money at very onerous rates and post collateral, in essence, to stave off this problem of all of the money leaving and to be able to pay the redemptions without selling their toxic assets. So we're over $90 billion here. And as you continue to have money sucked out of the system, as in search of yield with safety going directly to the Treasury and removing the risk of the banks, it's going to create massive strain, in my opinion, massive strain on the banks. And the part that's very interesting is that the big money is coming out of the commercial banks and going directly to the Treasury, removing this systemic risk that ultimately feels to me like it's going to happen. There is going to be an event where several of these banks are going to go upside down, and the panic that will ensue is extraordinary. They are not addressing this. They are aiding and abetting it.
On the threat of de-dollarization, Schectman says the pieces are falling into place faster than anyone can follow, and he is not the only one talking about the trend. Financial behemoth JP Morgan recently issued a report explaining that the de-dollarization trend is gaining steam as central banks are unloading their U.S. dollar holdings. According to JP Morgan strategists Mira Chandan and Octavia Opescu, the dollar's share in central banks' foreign exchange reserves has dropped to a record low of 58%. The strategists add that these central banks have been balancing their reserves by heavily loading up on gold, especially over the last 5 years. Last month, banking giant UBS said that central banks plan to accumulate 700 metric tons of gold worth $48 billion this year, as countries shy away from the U.S. dollar due to geopolitical concerns and persistent debasement of the dollar. According to Schectman, the trends are growing even faster than everyone is willing to admit, and all Americans should be very concerned. Here is another clip from the interview.
As far as BRICS are concerned, there have been several things, and I like to keep on top of it. And some weeks we don't see a whole lot, and some weeks we see a lot of stuff that is happening. And recently, the South African foreign minister, his last name is Sukolo, I forgot the name, but something along those lines. Anyways, he's talking about many of the countries in the European Union getting more comfortable with accepting the reality that is the BRICS. In fact, he more or less said that all arrows are pointing towards France and Belarus joining the BRICS nations. And recently you had Macron come out and publicly say that staying with the dollar is great risk, and to continue trading with it is something that could spell trouble for people or countries holding large dollar reserves. He came out and publicly said that. We know that he struck a deal with China, 51-point deal ranging from 5G to military engagement. We know that he did a large liquid natural gas deal and paid in yuan. You can see him pulling away, and when the South African foreign minister hints to France and Belarus joining the BRICS nations, that is really, really something that the West would not be very happy about. But it is something certainly to keep a very close eye on. You have the Iraqi government who just banned all entities in Iraq from initiating business transactions with the United States dollar. And in fact, offenders who trade in the US dollar will face a penalty up to 1 million Iraqi dinar, and repeat offenders will face a jail term of 1 year or more and have their business license overturned. And I don't know. This is the thanks we get, obviously, for saving them from their dictator. Which again, I'm very it's tongue in cheek, I guess you could say. You also have what I think is very interesting. Listen to the names of these countries. You have Iran and Saudi Arabia, who, remember, they've hated each other for centuries, but just built embassies in each other's countries and have negotiated a peace plan that was overseen by China. And so you have Iran, Saudi Arabia, the United Arab Emirates, and Oman are to form a joint naval force under China's support in line with increasing maritime security in the Persian Gulf. I mean, these are our allies, minus China, and they are all, you can see where these countries are aligning themselves with, who they are aligning themselves with. And it's all against the West. I think that this, again, is something that should be very, very closely monitored. The story of the BRICS has yet to be even close to finalized. And I guess I would put it in the context of little by little by little, as we've said for over a year now, these pieces continue to be put into place. And when all of the pieces are in place, financially, business-wise, in terms of deals that are being struck, unilaterally moving away from the dollar, moving away from the SWIFT system, and also military alliances, as you can see here. When all of this is put into place, I believe that is when the dollar will no longer be accepted as the sole settlement currency by the Saudis and by OPEC. And, whether it be all of the OPEC countries on the Belt Road, the fact that Saudi Arabia just recently joined the Shanghai Cooperation Organization, the BRICS New Development Bank, on top of joining BRICS and on top of telling folks in Davos that they're open to taking new currencies, for oil, you can see the progression of all of these things happening. And now you got Mexico joining BRICS and France and Belarus, who Jim Willey told us France was going to join BRICS. I mentioned that on your show several weeks ago. That was the rumor. Well, it sure looks like that is about to maybe take a greater significance, or at least become more of a reality. It was one thing when he did the deals with China and paid in yuan. It's another thing to openly speak out against the dollar, the U.S. military involvement with Taiwan and or in the Ukraine. These things are starting to accelerate. And when our friends quietly tiptoe out the back door, I think people need to realize that this is getting to the point where we're going to see some sort of lines being drawn, I guess you could say. And that's when it gets really real.
5 years ago, a de-dollarization trend would have been pretty much inconceivable. Yet here we are with the largest U.S. bank finally admitting that the rapidly growing trend is a threat. Fortunately, precious metals analysts like Schectman have been talking about de-dollarization for much longer. And everything they've been warning us about is beginning to unfold, maybe even faster than they predicted. What are your thoughts on Andy Schectman's assessment of the many threats currently facing the United States economy? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.